if you try and print too much money, it eventually causes terrible trouble. And we are closer to terrible trouble than we've been in the past.
Charlie Munger is an American billionaire investor and the vice chairman of Warren Buffett's Berkshire Hathaway. The 98-year-old businessman and former real estate attorney has been very active in the investment scene since 1962. Not only did he experience the economic issues of the 70s and early 80s, but he also lost money and learned some valuable lessons which have guided him since. Despite experiencing the turbulence of that era, which included the 1980 to 1982 recession and an unemployment rate of over 10%, Munger warns that we might have something even bigger on our hands now. Welcome to Savvy Finance. This video examines Charlie Munger's thoughts on the monetary and fiscal policies that led to inflation itself, and how individual investors can stay afloat through it all. Munger speaks extensively about pressing issues affecting investors across all sectors, so ensure you watch the video to the end and smash the like button. Enjoy. During his interview, Munger talks about the progress that Japan has made since it started its severe quantitative easing era. Although the Asian country was the first country in the modern central banking era to adopt quantitative easing, other countries, most notably the United States, have also followed the same path in more recent times. Munger explains that despite the odds and excessive money printing, Japan has remained an admirable civilization and has not experienced any terrible consequences from its actions. Munger also points out that the country's 25 years of stasis can be attributed more to China and Korea than inflation. On the other hand, Munger adds that the US might not be so lucky. While Japan is a monoethnic country with a higher aging population known for perseverance and doggedness, the United States is almost the exact opposite. Here is Charlie Munger's comparison of the economic situation in Japan and the United States.
When you throw money, when you print money on the scale that modern nations are printing it, Japan, the United States, Europe, etc., we're getting into new territory in terms of size. The Japanese bought back not only a lot of their own debt, but a lot of their common stocks. So the Federal Reserve System, you can't imagine how much money printing Japan has done. And they haven't had all that much inflation, and it's still a very admirable civilization. In fact, you could argue that Japan is one of the more admirable civilizations in the whole world, in spite of all this very extreme government money printing they've done. And they haven't had terrible consequences. Now they've had 25 years of stasis with living standards not improving very much. I don't think that came from their macroeconomic policies. I think that came from the rise of tough competition for their export powerhouse from China and Korea. It's weird what's happening, and nobody knows for sure how it's going to work out. I think it's encouraging that Japan can print as much money as it has and remain as civilized and calm and admirable as it has. I hope to God the United States has similar happy outcome, but I think the Japanese are better adapted for stasis than we are. I think it's a duty-filled, civilized bunch of people, a lot of them older, not many young people, and they just suck it in and cope. In our country, we have terrible tensions. It's way harder to run a country which is not monoethnic like Japan. There's some professor at Harvard that has written extensively on this subject. It's way harder to run a nation like the United States with different ethnicities and groups and so forth than it is to run Japan. Japan is basically sort of a monoethnic civilization which is proud of its ethnicity, and of course they can cope with the troubles better than some other people can. We don't know where we're going. There's never been anything quite like what we're doing now. We do know from what's happened in other nations, if you try and print too much money, it eventually causes terrible trouble. And we are closer to terrible trouble than we've been in the past, but it may still be a long way off.
Munger, who is Warren Buffett's closest partner and right-hand man, also shares his thoughts on the similarities and differences between this inflation and the 1970s. The annual inflation rate rose to 7.5% last month, the country's highest since 1982. As a result, some people believe the policies that were used then could also work now. During the inflationary period in the 70s, the then chairman of the Federal Reserve Board of Governors, Paul Volcker, implemented some stringent policies that later reduced inflation but caused the 1980 to 1982 recession. Federal funds rate went from an average of 11.2% in 1979 to a peak of 20% in the middle of 1981. Prime rate also rose to 21.5% in 1981, leading to the recession, during which unemployment rose to over 10%. In his interview, Munger explains that the interest rate hikes led to a horrible recession that crippled the economy for a long time. Listen to Munger's explanation about why Volcker's methods will not work now.
When Volcker, after the 70s, the prime rate to 20%, and the government was paying 15% on its government bonds. That was a horrible recession. Lasted a long time, caused a lot of agony. I certainly hope we're not going there again. I think the conditions that allowed Volcker to do that without an interference from the politicians were very unusual. 2020 hindsight, it was a good thing that he did it. I would not predict that our modern politicians will be as willing to permit a new Volcker to get that tough with the economy and bring on that kind of a recession. So I think the new troubles are likely to be different from the old troubles. You may wish you had a Volcker-style recession instead of what you're going to get. Troubles that come to us could be worse than what Volcker was dealing with and harder to fix. Think of all the Latin American countries that print too much money, they get strongmen and so forth. That's what Plato said happened in the Greek city-state democracies. One person, one vote, a lot of equality, and you get demagogues, and the demagogues lather up the population, and pretty soon you don't have your democracy anymore. I don't think that was a crazy idea on Plato's part. I think that accurately described what happened in Greece way back then and happened again and again and again in Latin America. We don't want to go there. At least I don't.
Munger also weighs in on the conventional economic theory that argues that excessive monetary and fiscal stimulus has triggered inflation. He explains that he agrees that the stimulus has triggered the worst inflation in the United States in 40 years. He also believes that there will be a high economic price to pay as the Fed attempts to bring inflation under control. Munger states that the policies were very extreme and the U.S. economy is now flirting with trouble. Listen to Munger's explanation and his advice for investors looking to make the best of the situation here.
We've done something pretty extreme, and we don't know how bad the troubles will be, or whether we're going to be like Japan or something a lot worse. What makes life interesting is we don't know how it's going to work out. I think we do know we're flirting with serious trouble. I think we also know some of our earlier fears were overblown. Japan is still existing as a civilized nation, in spite of unbelievable excess by all former standards in terms of money printing. Think of how seductive it is. You have a bunch of interest-bearing debts, and you pay them off with checking accounts, which you're no longer paying interest. Think of how seductive that is for a bunch of legislators. You get rid of the interest payments, and the money supply goes up. It seems like heaven. And, of course, when things get that seductive, they're likely to be overused. It may be that you have to choose the least bad of a bunch of options. That frequently happens in human decision-making. The Mungers have Berkshire stock, Costco stock, Chinese stocks through Willy Woo, a little bit of Daily Journal stock, and a bunch of apartment houses. Do I think that's perfect? No. Do I think it's okay? Yes. I think the great lesson from the Mungers is you don't need all this damn diversification. That's plenty of, you're lucky if you've got 4 good assets. I think the finance professors that sell the idea that perfect diversification is professional investment. If you're trying to do better than average, you're lucky if you have 4 things to buy. To ask for 20 is really asking for egg in your beer. It's very few people can have enough brains to get 20 good investments.
The United States is at a crucial point right now, economically and politically. Apart from inflation, there are other macro issues that the U.S. and the rest of the world have to weather through to return to normalcy. From all indications, that might be a long time coming. What are your investment strategies for weathering the storm? And what steps do you think the Fed should take to see the U.S. economy safely out of the storm with minimal damage? Please drop your comments in the comment section below and like the video. Thanks for watching.